Good afternoon, everybody. Sorry for running a couple minutes late. I am an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. I got out of the Palantir Friday 110 puts, but I've got Friday 115 puts. I shorted Nvidia today, and I kept a small position. I shorted a good size amount of OKLO today, and probably have like half of it left. I shorted some MSTR on OK size as well today, and keeping some of that also. Cool. So that's kind of the position disclosure update. Just give me one quick second here. Okay. Man, it felt like a wild, crazy day to me. I actually had a really good day today, and I really needed it because I had been kind of getting hurt pretty bad last week through yesterday. So big P&L day today for me, which was much needed. And that's with a flat market. SPYs flat as can be. Qs down 0.25%. IWM relatively weak, down 0.5%. That's with interest rates up today. See what happens tomorrow with CPI. And the dollar down a little bit today. I'm losing my voice. I feel like I was talking so much today to so many people. But let's try to push through. So from an index level, it was pretty boring today. I know we had Jerome Powell speaking to Congress. I guess that happens yearly, and it's always a non-event. It's just an opportunity for our terrible elected officials to grandstand and not actually accomplish anything. So that always kind of turns into a non-event, and it was as well today. We closed flat on the day. It was a relatively boring day, but not as boring as yesterday. We did have a good bit of kind of volatility, but it's really chop. I mean intraday movement. It's really just chop within chop. Chop on the intraday, within the confines of chop on the daily chart. I've been repeating the same thing over and over and over again now every day, every morning meeting, every afternoon meeting. That hasn't changed. We're waiting for technical clarity from this market. Right now, the market is neutral or neutral to bullish, depending on which index you look at. SPYs between 600 and like 610, I would say, is neutral bullish. Below 600 becomes neutral. Below 590 becomes neutral bearish. Below 580 becomes bearish. So those are the key levels. Qs 530, 510. When you're in between that, you are very neutral on this market. It's a 530 area. We've tested it for 3 days in a row, but we haven't been able to, really 4 days in a row. We haven't been able to get above it or hold above it. So Q's full on neutral. And the IWM losing 226 today wasn't great on that relative weakness. So between 226 and 230, I would describe the IWM as neutral bullish. Between 218 and 226, and we closed below 226, I would describe the IWM as neutral. So in aggregate, as I look at these three important indexes, I see a choppy market. I see a market that is neutral to bullish. And I continue just to wait for technical clarity on this market to break in one direction or the other so that I can have more conviction on how I want to position myself and how I want to trade going forward. And when you have a market that you don't believe in, when you have a market that's giving you mixed signals, it means that you want to be trading less. You want to keep the risk tighter. You want to focus on things that are in play, things that have relative strength or relative weakness, things that are going to have a lower correlation to the choppiness of the indexes until we get better confirmation. So that's kind of been my focus right now. The technicals, as I just described, are neutral to neutral bullish. If they do break up and really clear through these resistance levels, I do think that you could get a nice feedback cycle of buying that comes into the market that forces things to really go higher. But my kind of qualitative fundamental thesis, especially considering kind of positioning and flow, kind of becomes more bearish as each passing day goes by. We're going to be approaching a seasonally weak period, and it seems like there's you could argue that this is some degree of distribution that's going on right now, technically in the market. We'll see if that actually comes to play or not. But you got to remember that topping is a process, whereas bottoming is usually an event. Usually how it works, not always. Sometimes topping is an event as well, if you get like a parabolic up move, but that's usually not the way it plays out. So we'll see. Just know your key levels, and we can become increasingly bullish or bearish as key levels in the indexes break, and that's pretty much it. From a trading perspective today, though, there seemed like there was a lot of distribution underneath the surface of stocks acting weaker or stocks acting stronger than the market did. First and foremost, even though I unfortunately am no longer short, is Tesla. Tesla, which is a big company, it's a large percentage of the S&P, which closed flat. It's a large percentage of the NASDAQ, which closed down small. Tesla down 6.5% today. So Tesla's going to be down 6.5%, and the SPYs are going to be flat. You know what that means. It means other things have to be positive. But this is what I mean when I say there was just a lot of trading underneath the surface or dispersion under the surface. Tesla just continuing to get absolutely trounced. It's the worst looking stock of Mag 7. At this point, it's starting to really extend to the downside, where I understand people who might want to try to bottom pick this and look for an extension bounce. It honestly should give an extension bounce at some point relatively soon. I'm not touching this. I'm absolutely not touching this. I feel like Elon's just torching this company. But maybe he doesn't care because he got so many other great companies that are worth so much money. But it should give an oversold bounce at some point. I'm more interested in shorting the bounce than I am actually looking for the bounce, like shorting the bounce after it occurs, than trying to buy it. But I think got absolutely destroyed. My idea of the day, my trade of the day was OKLO. I was writing it into the VTF as I started shorting it pre-market, and then it bounced back up at the open to give people a chance to get in if they didn't have it pre-market. It was a little bit tricky at this high, a high of 54.10, but a nice shooting star in the lower end of yesterday's range, which was an inside day. That gave me an opportunity to actually get heavier on my short, which was fantastic because I only had pre-market like 2/3 of what I actually wanted, and I was able to size up further in that bounce. So OKLO, the inside day and down, kind of my call of the day, my second best P&L of the day, my best trade on the day. First target, 80 EMA makes a lot of sense. I'm actually looking for a deeper move, though, somewhere between the 8 and 21 EMA on this. So we'll see. We'll see what happens with this market on the CPI tomorrow, because that's obviously going to have a huge impact on it. So that was a really good one for me today. I shorted MSTR today. I called out in the morning meeting that I wanted to short this on the break of this kind of shooter. I had an alert out at 3:30, and my 3:30 alert went off here on the first bar of the day. I didn't short it. My 3:30 alert went off on here again because I reset it. The second time it touched it, I didn't short it. But I told myself after I saw it bounce back off the second time that if it goes after a third time, I'm going to short it. So my alert went off for 3:30 that third time. I took the borrow, hit the bid, crossed the market, hit the bid, and caught the momentum on the break of the third test of kind of the support zone in that 3:30 zone. And that turned into a pretty good trade. Nice little break here. That's with IBIT starting to break lower as well. And we had spoken in yesterday's afternoon meeting about Pat's note that if Bitcoin, if BTC can really start to get below, I think it's 93,000, that's going to force a lot of potential leverage long selling. And below 90,000, that's an even bigger level. So we're not there yet. We're still above that, but this Bitcoin chart's starting to not look great. You really wanted it if you're a Bitcoin bull. You really wanted IBIT to hold 58. 54 is a really important level as well. 52 is a really important level as well. You start to lose 52, and this thing is going to look really bad. and it already looks like it wants to really kind of go after that 54. And then this MSTR is just levered Bitcoin basically at this point. So this thing has been building out this bull wedge that I've spoken about. It's technically a bull wedge, but if a bull wedge breaks to the downside from a failed move comes a fast move. So this thing could very, very quickly and easily get smoked back down to this 200-day. So if it works perfectly, my game plan right now is built out to hold this for 50 points of downside, which would give me a move down to like 270, which maybe is shallow. My Tesla short was certainly shallow. Did really well with it. We shorted the top. Got out at 400, reshorted it at like 420 on this day. We caught this move, got out of it, I think on that move at like 380 or something, and now it's down at 327 and it looks like it's on its way to zero. What else? It's MSTR, OKLO. Oh, and I shorted a little NVIDIA today. It's kind of just I really meant to short it as a day trade. But I did well enough on the day trade that I decided, you know what, I'm going to keep a very small amount of this and just kind of give the remainder of what I have back to kind of my original stop loss area, which is pretty much the high of the day today. So kept a little bit of that, and then you know, Palantir finally had a little bit of a pullback. I sacrificed some stock to the trading gods, if you will, after the close yesterday when they were squeezing this thing higher. I just had too much size on, so I sized down for a loss, even though it was honestly a violation of my rules, and I may regret it. But I needed to kind of take a little bit off just for peace of mind, because this thing just absolutely and utterly smoked me last week and smoked me yesterday, and my sizing on it was very big. But then today, we actually had some great call outs in this on the short side today. Originally, someone asked me about it in the morning meeting, and I was like, I really don't think that we should touch Palantir because Palantir closed on highs yesterday. Like, this pivot low yesterday is very shallow as far as a pullback goes. Didn't even pull back to the 80 EMA on the daily. But there's so much momentum behind this thing, and the 120 calls were going off yesterday, and it closed on highs, and it traded higher after hours. That you know, I don't know where this thing is going to top. I don't know if it's going to top at 118 or somewhere between 125 and 150, because momentum is a hell of a thing. The higher the price goes, the greater the momentum can become. So, you know, for peace of mind, I took like a third of my position off at a really bad price after hours, like 117 quarter or so. And again, kind of a violation of my rules, so I'm not happy with myself that I did it. I actually lost sleep over a violation of my rules. That's how much of a stickler I am on actually following trading rules. I didn't sleep well last night because I am more bothered by not following trading rules and game plans that I established for myself than I am by losing money, generally speaking, unless it's a really, really big amount of money. But I'm more bothered by a rule violation, because the rules breed consistency. So kind of knew I was doing the wrong thing yesterday, but felt like I needed to take some off just for my peace of mind. And then I was actually able to reshort about half, or even a little bit more than half, of what I took off yesterday this morning, when it was showing that it was setting up to kind of break down in this opening pattern. So, you know, if I originally took off a third after hours yesterday, I was actually able to reshort that stock even above that 117 quarter today. So now really it's turned into that I took off like a sixth of my position for a loss up there. So we'll see how this one plays out. I'm not necessarily convinced that this is going to lead to a huge move back to $80 a la Tesla. But I did, even though it's a very early call, kind of agree with Brandt's thought process in the VTF today when he said that he thinks that this thing is done moving higher, that they couldn't force it to continue today after how strong it closed yesterday. Little bit of an early call to say that, but I don't disagree with him. So we'll see what this thing does. If this thing even can just move sideways without making new highs, I'd be happy because I can continue to work the position and make money on it until I, improve my P&L. Because at one point, after battling this thing for several months, I had gotten myself green in the stock somehow, which was pretty impressive because I was down a lot in it at a certain point in December. And now, after yesterday, I was down even more than I was down on it that first time in December, which is pretty wild, considering it took me a lot more time to lose that amount of money or lose less than that amount of money the first time. But again, momentum is a hell of a thing. And that trade worked out great today. It was just a great call. It wasn't acting right on the second bar. If you were watching the tape, it just seemed heavy. And then when we got the 5-minute shooter to break to the downside, that was a signal that this thing was going to fail on the upside momentum. And there was pretty heavy volume in the beginning of the day. Not massive, but pretty heavy. That put all of those people out of the money that could lead to a feedback cycle of selling that could come into the stock. And that's pretty much exactly what happened. The name was super weak today, especially when you compare it to the Qs or the SPYs. So that kind of continued to be a big focus for me. And I think that kind of covers it on my end and covers it based on what we discussed in the morning meeting today versus how things actually played out. I'm really losing my voice, which is annoying. I have to go out to a dinner tonight. But I'm happy to I'm happy to answer. I almost never lose my voice. This is very bizarre. I'm happy to answer any questions that anybody may have. Don't have mercy on me. It's fine. I'll answer the questions. From Rex. Could you give me some feedback on my trading plan? I traded Shop today after its decent earnings report. Initially, it traded down on its report, but it slowly grinds back up to $124. I remember just looking at this pre-market and it was down. This stock was all over the place today. They hit it down huge pre-market and they opened it green. Typed this up and I was just surprised to see that this opened green. I assumed it was going to open up way down, but I agree with you that the report looked pretty good. But sometimes it's expectations, and I think that there was one missing piece of the puzzle on that Shopify, and I don't remember what it was because I didn't want to trade it. It might have been revenue guidance was weak, and revenue guidance is really important for these kinds of stocks. So that seemed to be why they were initially hitting it down. But then it was green by the open, so that's also interesting. So they traded it down. It worked its way back up. I was looking for a trade through yesterday's high with its strength. With the market gap down this morning, I thought that if the market could give a, I don't know what that word is, correction on the 5-minute chart, Shop could take advantage of it and go. So I took the trade at the open with the volume at 123.40. I sold some at 125-ish, and then it sold back down on the 5-minute. Yeah, so I don't have a ton of feedback for you on this, except for I wouldn't be overly analyzing the market when you're trading an earnings name at the beginning of the day, especially. The earnings report always, I'm not going to say that the market's not important. It is still important. It will still impact the stock. But the correlation gets reduced dramatically, especially at the open. The open is all about the earnings momentum. So I wouldn't be overly watching the market in the beginning of the day and trading Shopify on its earnings report and making decisions based on that. It doesn't hurt. Like I said, it still impacts it, so it's worth paying attention to. But I would just put that much lower on my list of important things than I would typically. So I don't have a lot of feedback for you on this because of how sloppy it was trading. So I usually don't like to trade things that trade this sloppy pre-market and then by the open where it's down and then it's up. I just find it's hard to get conviction because the market doesn't have conviction. With that said, on the daily chart, I see your trade. Just a simple breakout on a resistance of recent highs on the daily chart. So I don't hate it. You're basically just buying momentum. So the way that I would view this trade is you identified a daily level. You want to buy it up through yesterday's high. You bought it through yesterday's high. You put your stop loss at the low. It just should be just a very, very simple momentum breakout trade on an in-play stock. You're buying through yesterday's high. You put your stop at the low. You got your risk covered. It works, doesn't work. You move on with your life. I think that's just the relatively simple game plan to implement on this sort of trade. So I hope that helps. Of the previous week's low. Thanks, Sean. For Robert, how important for you is it to execute on the right side of the V? For example, Apple today going long at 955, above breaking the inside 5, above 230. Talking about this here. I called that long out today for the team. I didn't take it though. Off this pivot low. How important for you is it to execute on the right side of the V? Example today, going long at 955, above the break of the inside 5, above 230. So you're talking about this basically right here. Versus catching a rebid after touching the EMA at 229.50-ish. So for this type of trade specifically, I like to buy this on the way up. I like to buy this after the pivot comes in as a continuation trade on the way up. That's how I like to buy it. That's how I like to do my continuation trades. Honestly, so this is like basically a with trend kind of continuation trade. Similar but different is buying a counter trend move into extension. And honestly, in that situation, the right thing still to do is to buy it on the way up and not buy it on the way down. What do I do in practice isn't always that. With this type of trade, I try to almost always buy it on the way up. With those reversal retracement trades, which I would not describe that as this, I do think that the right thing to do is to still honestly buy on the way up, but I sometimes don't trade it that way because I use oftentimes more of like a build in, build out process where I'll actually be doing what conventional trading wisdom says not to do, which is I'll start buying that at a certain point if I'm patient and it's really extending on the way down. But I'll start it small. I'll give it, I'll take enough size to be able to make a little bit of money if I happen to be buying the exact bottom, but I'm not predicting that I'm buying the bottom. I'm predicting that I'm buying near the bottom. So I'll kind of start small a lot of times without an out and then build into that extension and watch it. Again, that flies in the face of I'm just being open and honest with what I do and what I sometimes think the right or wrong thing is to do, because that flies in the face of conventional trading wisdom that would say to not do that, to only buy things on the way up or only short things on the way down if you're taking like a big upside extension short. But I'll oftentimes start just by building in and kind of working the position, as I've talked about a lot in some of these afternoon meetings. But for this trade specifically, these continuation trades, part of the reason why I do that on the counter trend stuff is because I feel like sometimes if I'm actually buying on the way up, because it's a counter trend trade, it really reduces my reward profile for the risk that I'm putting on. It's very different in a continuation trade, because in a continuation trade, you don't know really where this thing can get its way up to, or you can have like a very high target. You're not just looking for a retracement back to the moving averages, right? So with this type of trade, I would rather get a little bit of a worse price because I have confirmation that the pivot has come in, it's bouncing off that moving average, it's trading its way higher, and that's how I want to execute it. So, and if I have a little bit of a worse price, it's fine because the reward profile is so much greater on a with trend trade. I hope that helps, Robert. I appreciate the question. What else you guys got for me? Anything else? You guys can have some mercy on me. I'm keen. I have a pretty good idea of how you trade, and I appreciate everything you've taught. But do you ever feel that extension is a better indicator of taking profit as opposed to starting a new position? Sure, if I'm already in it, that's my preference. I know, and I said this in a meeting somewhat recently. I know I've been doing like a lot of counter trend stuff recently, and part of the reason is because outside of this recent Palantir mess for me the last week, it's been working really, really well. The quantum names, MSTR, Tesla. It's actually kind of just been one after the next that I've been able to come in on the other side and do really well with the counter trend stuff. I prefer to be with trend. I prefer to do exactly what you're talking about. I would prefer, I don't know, to be long Palantir, to be totally honest, and say, wow, it's really extended here at 115. Let me take some of my long off. That is, you know, if you've been with me for years, more of what I'm usually preaching than coming in on the other side of the trade. So that is always my preference. But the fact of the matter is, I missed moves. You know, I wasn't involved in, even though I think we called it out, I wasn't involved in like MSTR on the break of like 276 where I could be, you know, looking at this extension at 525 and say, hey, this is a great opportunity for me to book some profit. I wasn't in that long. So I said, all right, now what do I have in front of me at this given time is this massive amount of extension, and there's an opportunity here for me to short it. Or actually, Tesla is a different example because I was long Tesla. I don't remember where. I caught some of this move to the upside and got out of it into that upside extension. And then eventually this thing got ridiculous up here in 480. I think actually the first time we shorted it was this extension on November 11th and made a few bucks. And then somewhere else, you know, we shorted it into this 480 and made money as well. So without a doubt, Keen, 100% agree with you. The better trade to be in is to buy the breakout. We called this breakout at 360 in Tesla. The better trade, in my opinion, is to be long Tesla at 360 and then deciding what you want to do with your swing position at 480 than it is to be shorting at 480, hoping and praying that you can, not really hoping and praying, but you know what I mean, that you can get a move back down to the 80 MA on the daily chart to have an okay risk reward in the counter trend trade. The long is the better trade. The with trend trade is the better trade. The breakout is the better trade. It's the easier, less stressful money, and I'll stand by that till forever. Even if I recently have been actually doing and being successful with trades that have been coming on the other side. So if that helps. From John, bagel to head, we break up or down from this range based on CPI, PPI, Fed chair, taking rest of week into next week. Bagel to head, down. Bagel to head, down. Just think we might need another week next week. But easily could be wrong. So let's let the technicals tell us. SoFi is a little bit out of play right now. You know, I keep kind of selling puts in this thing every week. Somehow I've been, and they haven't been too out of the money. Somehow I've been just always collecting the premium every single week on these, except for maybe this time when it really extended up to 18. I don't think I did it up there because it was too extended. Waiting for it to give me stock to get back involved at a certain point. It's been a really strong name, but at this point it's just range bound. And if anything, it looks like it wants to work its way down a little bit from here, which is fine by me. I'm willing to get back involved in this stock after being in it for so long. So we'll see if that happens. But it's been kind of out of play. It's not a lot to do there. From Rex, follow up with the Apple trade. 8 and 21 EMA is still above on the daily chart. Would you still be greedy with your target? Yes, because it was in play. I wouldn't have been involved or looked for this Apple trade at all if there wasn't news and it wasn't in play. So that in play aspect of the stock would make me interested in being involved in a name that I otherwise would not be involved in because of the daily chart. And as we discussed in the morning meeting today, that Apple news, I think, was very, very significant. And in some ways, I think it helped save the entire market today. What's my opinion on swinging Apple from Robert? I like it. I just don't like the market right now, and it's right in front of CPI. So Apple in a vacuum, I like, especially after this news today. But when I factor in those other layers of probability, the market, which has me very nervous right now, and the fact that there's a wild card with the CPI tomorrow, I don't like it as much. But yeah, barring those factors, or if the market can actually help and break out per John's question, then yeah, you could see this thing back at testing the levels from the earnings day for sure. Yeah, Robert, I do think it was really important news about that that Baba Apple AI implementation this morning. I think it was very important. Scott asked me about AIFF. I have no idea what this is. I think it got one mention today in the VTF just because it was the crazy stock of the day. I don't know what the news is. I don't know what the float is. I don't know anything about the stock. Bull flag on small time frames for continuation tomorrow. If you're talking about this pattern into the close, I don't know. 50-50 on these types of things, especially without me knowing more information. When they have these huge pumps come into these stocks and they go up 180%, sometimes the next day they're up another 180%. Sometimes the next day they have fully retraced the move because it was a pump on some BS news, or the company needs to raise capital, so they announce a secondary offering. It's definitely not something I would be swinging overnight, unless I was hugely in the money. Then I might swing it, but I wouldn't buy. Like if you're long because you caught this in the beginning of the day and you're long from $5 and it closes at $8-9 and you want to keep some, fine. But I would not be buying this pattern into the end of the day and keeping it overnight. Tomorrow, if you just want to day trade it, then yeah, watch how the technicals play out. See if it breaks up. Like I said, it could go up another 150% tomorrow. I won't be surprised to see this type of thing at 15-16 tomorrow. I won't be surprised to see this type of thing at 4 or 5 tomorrow. And I almost think I could flip a coin. If I had a little bit more information, I could have maybe a little bit of a better assessment as a low float stock. Even then, honestly, even if it's a low floater, a low floater just means that there's an even higher probability that it could actually break up and give that next 150% plus move tomorrow if it's low float. If it's not low float, then it makes it even harder to do that. But I don't have a strong opinion for you on this one. Go to $3.50. Nice job. They had news with NVIDIA. Gotcha. I missed that this morning. From anyone, I have overnight positions. I sometimes have trouble focusing on making new ideas or trades because I keep looking at those positions. Is there anything you do to help focus on new game plans while those positions work themselves out? For me, a lot of the times with my swing positions, I hardly look at them at all, to be honest. Because you have a game plan that's set. So there's nothing to do. You decided to keep it overnight. The next morning, you just have a continuation of your game plan. So you have your bids out, you have your offers out, you have your stops out, whatever. And then you just let that trade play out per the game plan, and there's nothing to watch at all. Because you already have a game plan on. There's nothing to do except if you see that you get executed on an offer, or you see you get stopped or whatever, if you have to make a position adjustment to put out a new bid or a new offer based on a previous execution, then you do that. But otherwise, I don't pay attention to my swings at all because it doesn't matter. I decided to keep it overnight. I already have the game plan for it. I just let the game plan follow through. All right, it looks like I got through all the questions and I'm losing my voice. So I'm going to end the meeting there. Have a great night, everybody. I will see you all tomorrow.